It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is me, the tax lady. And we want to make sure that it's not just taxes. We want to make sure that your entire finances are A-okay, because that's what we're talking about. But obviously, our main thrust is taxes. And believe it or not, extension deadline is coming up October the 15th. EG Tax is there. If you haven't filed your taxes, we're ready. Our corporate headquarters at 1890 Colvin Boulevard will help you. So, and I have my buddies in studio with me, Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday. And, you know, really quickly while you're saying it's not just taxes, but your whole health on October 18th, we have Brian Ferracci in studio, and he'll be talking about health insurance and navigating some of those things. You know, when you reach the age of 65, you are required to sign up for Medicare, and that in there comes a lot of questions. And so he'll be on the 18th.
And the thing is, the whole Obamacare thing is really unraveling effective January the 1st. And so there's a lot of things in the healthcare industry that are going to be, you know, some of the things that you had to put in, you don't have to do now. So, you know, you can actually do catastrophic plans, which will save you money. So there's all kind of things. And so that would be a great segment to listen to.
Yeah. And
Right?
I cut off Chris.
Christopher? Where's Christopher Fabian?
Hello, Esther.
Hello, Christopher. All right, so you know, before and today, I'd kind of like to talk about being self-employed and having pensions. You know, those are two things that are very confusing. So I want to talk about that. But before we get into that, and again, 8030930, 8030930, star 930 on a cell phone, 716-8030930. We have our seminar that we extended. So next Saturday, we have that seminar, right?
Yes, October 4th from 10.
And we'll talk about the big, beautiful bill. And really, if you know the stuff that's in that bill, you can affect less taxes coming out of your paycheck right now because you'll know what to do. And it's a great thing. It's absolutely free. It's at our training center, and it's from what time to what time?
From 10 to 1.
10 to 1 on next Saturday. So go to egtax.com and sign up for the Big Beautiful Bill seminar. The people that have come, I think they found it to be really worth their time. No charge, right?
Right.
Just want to help people.
Yes.
Right.
Everybody enjoyed it. They learned
And
a lot more.
the other thing we have coming up in October is what?
Tax school.
Right. And that's really, really good. I mean, it's when you really study taxes, you think, oh my gosh, I had no idea that this is how our tax structure works. And so again, you can sign up for the free, tuition-free tax school at our website at egtax.com. And that starts the middle of October, right?
Yep.
It does.
Good.
Yeah.
All right. And then I wanted to also, before we get into taxes, you know, it's all about making money. And I just thought, even though interest rates are creeping down because the Federal Reserve has loosened interest rate amounts that we have to pay, there are still a bunch of banks that are paying a large amount of interest on CDs. And that would be Marcus Bank is paying 4.25% on 6-month CDs. Marcus Bank is also paying 4.05% on 13-month CDs. Next Bank is paying 4.05 on a 1-year CD. Lending Club is 4.45% on an 8-month CD. Synchrony Bank is 4.25% on a 15-month CD. That's remarkable. And United Bank is 4.25% on an 18-month CD.
Wow.
And they're paying 4.20 United Bank on a 2-year CD. So, you know, I just thought, even though the Federal Reserve is reducing interest rates, there are several banks that are still paying big, I think, big interest rates, and especially United Bank for 2 years. 4.20 is for 2 years remarkable. And again, if you need any help regarding that, you can call us at our corporate headquarters at 632-7886. Can we put this on our website? You think Grace could get that on there?
I think so.
That
I
would be
think
great.
so.
We'll put it on our website.
Yep.
All right. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. And we have Mike calling. Hey, Mike, how can we help you?
How you been, Esther? I haven't talked to you in a while, but
I
do
know,
listen.
Mike. What the heck you been doing?
Way too much to do, never enough time.
I know what you
Put it
mean.
that way.
All right. What's your question, Mike?
Before I get into my question, can I mention one thing about a bank paying 5% for a year, but you have to have a checking account, of course, with a direct.
Oh, that's great. Which bank?
5%, and it's not a CD. It's 5% in your savings account, whatever.
You mean
put in there.
it's a money market, so you have free access?
Yeah, you get free access. Well, you read that stuff, and you got to be a genius to understand what it means. But I did open up an account there because I got a CD coming due and put in a small
Well, so what bank is it, Mike?
direct deposit. Pardon me?
What bank is it?
It's in West Seneca at the site across from Wegmans and Tops, the bank that used to be there. I can't think of the name.
Oh, Mike.
Sorry.
I'll
Mike.
Google it right now. You
Okay,
asked
Tip's
the
gonna
question.
Google it.
Okay, go ahead.
But that's great. But you have a question.
Okay, yes. Now, I was just reading something yesterday about this inflation adjustment check or whatever coming from New York, and they said that they were basing it on your 2023 return. Now, I had some problems and had to deal with the IRS and mail things back. But my 2023 isn't in yet. Will I be able to get that when I do
No,
my
you need to get that return in, Mike. So, come on
Get it
down
in
and
yet.
we'll get it in for you.
Can't do it because I did it one time before and screwed everything up.
Yeah, but we'll unscrew everything for you. We'll get a transcript. We'll
It-
we're going to make sure you get your money.
Mike, is it Key Bank, Citizens Bank, Community Bank?
Community Bank, I believe.
The community bank may be the one if it's across from Key Bank.
Okay, I think
Across,
I think it's Community Bank.
Well, we'll find out, right?
Yep.
right. But
And Mike,
5%
come-
on savings
come-
for a year.
Wow.
Come down to our corporate headquarters. We'll get a transcript of your tax situation, and we will unscramble the mess. But otherwise,
they-
you're not gonna get
Mailed back,
you're not
so
gonna get
it'll
that
be in
money.
the envelope for a while. You aren't going to get a transcript for a while. I've
Tip,
been
what do you
dealing with
say?
them.
Okay, I was digging in the bank situation. Repeat the question. I'm sorry, Mike. Repeat the question.
He said that it's all messed up and he wouldn't get a transcript for a while, but that's not true.
No. What is messed up? His prior tax return?
Yes.
No,
Yes,
but they
in
still
fact,
have to
it was
give.
mailed
They
back
still.
earlier
They
this
still.
week.
They still have your transcripts. Even though the tax return is messed up, they
Right.
still have your transcripts.
They know what's happened, and when we take a look at what's happened, we can help you with that, and there's no charge. So, just give us a jingle. We'd be happy to help you, Mike.
Well, I did e-file one time, and it went in instantly, which of course you know, but the other one was still sitting in the envelope, and there was
Okay,
money
but
being
we'll help you if
the
you.
next year or so.
But Mike, if you
e-file.
don't come to let us help you, we can't help you.
Okay, I understand, Esther. Thank you very much.
All right, love you, Mike.
Thank you for the
Bye-bye.
tip, Mike.
Thank you. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. I would like, on the other side of the break, to start talking about self-employment. That means you might be a landscaper. You maybe did snow plowing. Maybe you got a full-fledged business. We want to make sure that you don't overpay your taxes. We're going to talk about that after the break. I'm Esther Gilius, the tax lady. Hey, to us, you are family. I'm Esther Gullius, the tax lady, and we got extension deadline coming up, right, Chris?
Right, October 15th. If you filed an extension, you got till October 15th to do it.
So let's say that you owed $20,000 and you filed an extension, but you didn't send any money in. Will you be penalized?
Yes, you will.
You will. That's right. Because with the extension had to go the money, right?
Right. Right. Yep.
So,
and
anyway.
and for the people who got confused with everything going on with the last caller, the New York State deadline for your 2013 to get the inflation check is also October 15th. So
So Mike wants to make sure he does this right away.
right, exactly.
Okay, so that's coming up as well. Okay, so self-employment, a lot of times people think that they're making some money, maybe they're doing tutoring, yard work, snow removal, or maybe they took a gander and opened up a business. And really, there's different ways of reporting that income. If you didn't get a certificate from the city in which you're working, like that says that you have a sales tax certificate, do you actually have to report income that you made that is all cash?
Yes.
How's that for a sneaky question, Chris?
Right.
Yes. Yeah. It doesn't preclude you from reporting all of your income. You got to report it all.
So whether you're a tutor, whether you're doing daycare, whether you're doing yard work, whether you're cleaning out basements, any kind of freelance income, whether or not you are licensed, that income you receive still has to be reported, correct?
Yes.
Now, if you haven't structured it in any other way, like you're not a subchapter S corporation or a corporation or a partnership, and you're doing this all on your own, what would be the business structure that you'd be using?
A DBA, a Schedule C.
Well, you don't have to be a DBA, do you?
No.
You can just be Tiffany Fabian,
Correct.
right?
That's right.
But here's the thing. All the income you receive that's on that Schedule C goes into the gross income. But what can you do? What is deductible that brings you to the bottom line?
All your expenses, whatever you spend money on.
Like
To make
advertising, mileage,
Yep.
checks that, your business checks.
Yep. Cell phone,
your business
internet.
card, your cell phone, your supplies, the equipment that you bought, rent that you might have paid. Maybe you're putting stuff in a storage facility, right? All of those things are deductible.
Right. Yep.
Right? And so you start off with your income at the top of the Schedule C, if you're a sole proprietor. You take all of your expenses, and then you come up with a bottom line. Now, let's say that you're somebody that just started a business and you bought some equipment. How is that handled, and how can that really help somebody with their small business?
Well, as long as you have a profit, you can take a 179 expense, which means you're writing the full purchase off in the first year. And so that it's a good thing to have for 1 year to do it that way.
And like Chris said, you have to have a profit. You could also maybe utilize bonus depreciation if you don't have a profit, where you could take 50%, right?
So let's say you bought let's say you started a landscaping business and you had maybe $4,000 worth of equipment. If you depreciated it, you'd basically only get 20% a year, but you can make an election to do bonus depreciation, write the whole thing off, and that would save you a ton of money, because when you're self-employed, you not only pay income tax to the federal, you pay income tax to New York State, and you also pay FICA.
Right. On the net profit.
On the net profit. So you want to make sure that you get your net profit down as much as possible. And that's really important. And if you're a small business owner and you think, I'm not going to claim it, That's not a really good thing to do, number one. Number two, if you do this legally and you get yourself all set up, we can show you what the best business structure might be. Like, for instance, there are a lot of people that have C corporations. What's the difference between a C corp and an S corp?
A C corp is C corp. You pay double taxation. An S corp is a more favorable way of doing a corporation, and you don't have to pay you don't have to pay double taxation, and so you have to make an election to become an S corp. And the nice thing about an S corp is the double taxation is you have to pay dividends to yourself on a C corp, whereas an S corp you don't fall into that category. You have to make sure that you pay yourself a reasonable salary if you're an S corp, and you don't find yourself with that double taxation. And both of those, the S corp and the C corp, it's an entity unto itself. And so it gives you an umbrella protection so that entity thrives on its own. So if any casualty happened, people couldn't go after your personal assets. But Chris might want to expand upon what's the advantages of an S corp.
Well, that was pretty good right there.
Well, and also a C corp pays a flat rate, right?
Yep, 21%.
Right. And so let's say you're starting off and your net profit is not very large. And so if you were an S corp, you might pay 10% in taxes or 12% as opposed to 21%. So, and again, the double taxation, like Tiffany says. So if you are a C corp and you don't know why you're a C corp, I suggest you give EG Tax a call, or call your accountant and say, why the heck am I a C corp? Because you are paying on the net profit at 21%, plus when you take the money out, you pay again as a dividend. Mm-hmm. Right? On that same money. So something to think about. And not to mention how when you're a small business, sales taxes, that's another thing that people overlook.
That's right. Yeah.
And how does New York State feel about sales tax?
They will shut you down. They pretty much tax everything. But if you don't pay it, they will shut you down.
Right. And so how does somebody go about getting a sales tax number? And should they get a sales tax number, or should they just wait till January and redo it then?
No. If you're doing a business that's subject to collecting sales tax, you got to do it before you open your doors, and it's not hard. You just go online and you can Google apply for a New York State sales tax license, and it takes you about 10 minutes to do the application online.
All right, so then once you have your sales tax number, do they require that you file monthly?
Quarterly at first.
And then eventually.
And then if your sales are small enough, they will do an annual return for you. You would have to then switch to an annual return. But you have to file online. They don't do paper returns for sales tax anymore. You got to do it online.
All right, let's talk about being self-employed. What if you have your laptop and you really like doing your bookkeeping at the dining room table? What might you say to that kind of a person who's self-employed?
Do you have another room in the house that you can move your office to?
Right, because having an office and home is another deduction where you're able to take a portion of your property taxes, a portion of your mortgage interest, a portion of your utilities and upkeep and of your home office. But if you're going to be working on your laptop while you're watching TV, then you won't qualify. So sometimes it just requires you to have a more disciplined attitude.
Yep. Absolutely.
And a room that you use regularly and exclusively.
Yeah. And then
for
if you have a room in your house, you can take your miles that you might not have been able to take. There has to be a room in your house that you can solely exclusively use as an office, and then that would open the door to allow you to claim more mileage rate than you are doing maybe right now.
All right, let's go to our text that's been waiting here.
Yep. That inflation check, my friend, full-time New York resident in 2023, but moved to Ohio in 24. Will he get that check? And Chris knows the answer to this because I've already been picking his brain.
Yes, he will get the check. The only thing I would be careful of is that it's going to be a paper check. They're not directly depositing these. So it's going to get mailed to his address on
Former address, right?
Yep, on that 23 return. And then they don't forward checks. So his check or her check could possibly be sent back to New York, depending on that address on the 23 return.
So what
Yikes.
should they do?
Contact New York State and
And
see.
do a change of address?
Well, yeah, they could do that. They could see if they can do that over the phone. That would be good. That would be a good thing.
Okay. All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Going back to just before we leave the subject of being self-employed, whenever you have an asset that you've been depreciating, in the year that you sell that asset, you have to report the sale of that asset as income on your tax return, correct? Even though you used it as a trade-in, like a truck for a truck.
Correct.
So you want to make sure that you understand what you're doing. Now, if you didn't trade it in, if you just retired it and you started driving it yourself, then do you have to recapture that depreciation?
No, you
Right.
just turned it into a personal asset, and that depreciation is there
Right,
just
so-
in case
so
when.
There are things in tax law that you really want to make sure that you get a handle on, because to do it incorrectly can cost you a lot of money. So, and of course, we got the big beautiful bill looking at us, and we want to make sure that if you're somebody that wants to know about how that affects you, and I'm going to tell you it affects a lot of people very positively. We have that seminar a week from Saturday. Now I'm going to take a break for the news. I'm Esther Golias, the tax lady. See you on the other side.
So are you going to be hiding tomorrow, Esther?
Of course I'm hiding tomorrow. The bills are playing, right? I mean, I already told friends, they said, well, should we come over and watch the game? And I said, well, I won't be around,
I'm looking at
I
Dan.
only watch the highlights after they win.
I'm looking at Dan. He's got Toronto Blue Jays. Have you gone to a game recently, Dan? No. He's shaking his head. No.
All right. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Okay, so here it is. We got October looking at us in the face. We got October, November, December, 3 months. And usually that means that people are looking at ways of making extra money, because the holidays can be very expensive, right?
Yes.
So one of the things that people think about doing is taking money out of their IRA or their pension plan. And if they do, that isn't necessarily the best thing that they can do, right?
No, because you don't want to pay the penalty and the taxes. As a matter of fact, I had a client call me the other day, and she has an annuity that she was thinking about cashing in. And she doesn't have to usually file. It's going to be $70,000 in growth. And so Chris and I were going back and forth to her, and he said to her, do you have to cash it in? Can you wait till you're over the age of 65? Because then you'll get, hopefully still the law will be the same, you'll get that extra $6,000 bump. So anyways, long story short, no, it's not a good idea, especially if you're under the age of 59 and a half.
All right. So the best way, especially when you're trying to look for ways to get money, the best way to get money is to borrow it. If you don't have, if you have it in your investments, in the bank, in investments, the best thing to do is to utilize that stream of income. Because if you take money out of money that's already been taxed, you're not going to pay taxes again.
Right.
And if you take money and borrow it, you're not going to pay taxes on that either.
Correct.
because borrowed money is tax-free.
And the nice thing about if you borrow from your 401k, you get to pay yourself the interest, which is a really nice feature, and you get to pay it in sequential payments over time, and so that's all.
And you're paying yourself.
and you're paying yourself.
So this time of year when things are starting to get tight because the holidays are coming up and you're thinking about where to get money, the first place I would suggest you get it would be from your savings, if you have savings. Mm-hmm. The second place from your pension, and we're going to talk about the exceptions to penalty there. And the third place would be, again, to borrow against your pension, because all three of those can cost you zero taxes, because you certainly don't want to have federal taxes, under the age of 59, premature withdrawal taxes, and state of New York taxes. That means you might pay 30 or 40% on the money you're taking out. That's like shooting yourself in the foot.
It sure is. It doesn't make any sense. And so, I always say like that, my client who called me about the annuity, just give us a phone call before you make a decision, and we can tell you where it is. I mean, another client of mine, called me yesterday about their mom who passed away in the sale of a house. But anyways, I don't want to get off this topic. Yes, just give us a phone call and we'll tell you what the consequences are.
All right, so if you take money out of a qualified pension plan and you're under the age of 59 and a half, it's fully taxable as long as it's a traditional pension plan on the federal, the state, and plus a 10% penalty, right? But there are exceptions to penalty. And the first penalty is that you got terminated or you retired and you're over the age of 55, or 50 if you're a public service, a public servant, right?
Yep.
So that's an exception to penalty. Another exception to penalty is that you're taking periodic payments. You're taking it annually. You're going to annuitize your pension. That's another exception to penalty. Another section of exception to penalty would be that you're totally and permanently disabled. Mm-hmm. Now, that doesn't mean that that you're completely incapacitated, but it means you're unable to work. And that can be due to an emotional situation too, can't it?
Yeah.
Right? I mean, you're suicidal, depressed, whatever. But that's another exception to penalty. Another one is that you are the beneficiary of somebody that passed away. Another exception to penalty is that your money that you're taking out of your pension plan is to pay for unreimbursed medical expenses to the extent that they're an itemized deduction. So, your loved one is in a nursing home and
Getting dental work done.
or getting dental work
So
done. That's
expensive.
true.
Yeah.
Or a quadro. Now, what's a quadro?
It's a qualified divorce distribution of money that you get from the other partner's pension plan. And so
So that's another thing that you can take out without paying a penalty. How about expenses from an IRA for education?
Yep. Yeah.
So
the first
that's another
10,000.
exception to penalty.
Yep.
And then there's the first-time homebuyer deduction, right?
Right.
as
right.
long as it's from a 401k.
An IRA.
IRA. Gosh, golly, I can't believe I did that. Yep, as long as it's from an IRA and not a 401k.
Right. Or to
And
pay a
that's where-
tax levy.
Right, but the thing is too, you'll see some of these were just IRAs only, so that's where tax planning comes in, because you could roll over some of your money from a 401k to an IRA.
So, okay, so let's say that I needed
point.
this money for, because I'm disabled, and I have my money in a 401k. If I take it out of my 401k plan and I'm disabled, is that still an exception to penalty?
Yes, that one, yes, because that's
How about if my kid is going to college?
the college has to be from an IRA.
All right, so all I have is a 401k plan. How can I make it so that there is no exception, so there's an exception to penalty?
Well, like I was just saying, you can move money from your 401k to an IRA through a rollover, and then you
And
take.
then take the money.
Yep.
And that's what's so important is these things, I've had people, and I'm sure you guys have too, that didn't know that it had to be an IRA. And they only thought that the education expenses were going to be deductible for their kid in college because they took it out of their pension plan, but they didn't know it had to be out of an IRA. And so therefore they ended up paying the taxes plus the penalty.
Yeah, absolutely. So if you just make sure and you make a phone call, we can tell you, where it'll end up taxing you or not taxing you.
Right.
Right. And I
yeah.
just want to say also, because you can take money out of your 401k through a hardship, because that's how they let you take it out early. That doesn't mean it's penalty free on your tax.
Tax-free.
Or tax free. Right.
So you have to be really, really careful. I will tell you, and again, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. What people do is they think, well, this is all just free money, and I'm just going to take it out. And they take out $50,000 and they end up paying $20,000 in taxes, and they got to come up with the $20,000 at tax time, and they have really shot themselves in the foot.
Right. Yep.
A lot of times I'll recommend, we're getting so close to the end of the year, is take half of it out in 25 and then push the other half out into 2026.
But would you recommend that they not do it though?
Yeah, absolutely. Yep. Maybe, get a loan from your family member, get a loan from your 401k. There's other options.
Right. So I'll give you an example. Let's say you got your credit card debt is driving you crazy. So you take $50,000 from your IRA. You're 50 years old at the time of the withdrawal. Your other income from wages are $90,000 and you're single. You will pay taxes on the $50,000 of 24% to the IRS, plus a 10% penalty, plus another 7% to New York State, or 41%. So you took that $50,000 out, and you're going to pay $20,500 in combined taxes. I mean, but had you borrowed that money from your 401k plan or a home equity. A lot of times, Tiffany, when you're talking about the home equity loans and you're saying it's 50% cheaper to borrow money from your home versus a pension, isn't that true?
Yes.
Yeah.
Yes.
Yeah. Oh, yeah. You got to weigh all the costs. And that's
because you're going to pay, let's say that you're paying 6% on a home equity credit line versus 41% if you take it out of your pension plan. Right? I mean, you got to think about that.
Yeah, I mean, Chris was with a client yesterday, and they want to file some back taxes. And part of the reason they want to get all their taxes done is they want to get a home equity line of credit. But you can't get a home equity until you get those taxes in. And
Old
so
taxes.
he's working with them, and he will satisfy their request.
Absolutely. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Don't forget our tax school's coming up in October, and next Saturday is our final big, beautiful bill seminar. That's no charge. You can go to egtax.com and register for both of those. Okay, and we got a text here, Tiff, right?
We do. Dear Esther, regarding the New York State inflation refund check, what line on the IT 201 is used to determine my income for purposes of getting the check? It's so funny. We went to dinner with my daughter and her new husband last night, and they were talking about the amount of money that they made in 2023, determining if they would qualify for the check that's in the mail. And so there's a point where it's phased out and you get less of an amount. And so this person probably is wondering what amount that they're going to get, if it's 300 or 100, but Chris is going to answer the question.
It's the New York adjusted gross income line, and that's line 33. So line 33 on your new IT 201.
For 2023.
For 2023, yes.
Okay, good enough. All right, I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Don't forget, September 30th is the deadline for getting an EV. If you want the EV credit, December 31st, 2025 is the deadline for getting energy conservation credits. That can be up to $3,200. The EV credit can be up to $7,500. And that's it. I mean, so don't let these things pass you by. It's like free money. You just have to be able to do it. When you do stuff, you can affect good changes. And that's what we're all about. So we're going to take a short break. We'll be back on the other side with your questions. I love the Bills. I just wish that I could know the answer before the game plays.
Well, I think a lot of bettors would like that too.
I'm telling, I mean, it, anyway. All right. So I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, so the state of New York really treats public employees special when they receive a pension. How so?
So that means that all of the pension is tax-free on the state of New York, which is very kind. And so they don't pay any taxes on the state of New York, which is just a wonderful, wonderful treasure.
Right? Mm-hmm. What if you're under the age of 59 and a half?
You still get it tax-free.
Right. So if you are retired as a public employee, federal, state, local retirement plan, then your entire pension is completely tax-free in New York State. How about your Social Security?
Tax-free on New York.
Completely tax-free in New York State. What if it's an IRA?
Then you only get, if you're 59 and a half or older, you only get the first $20,000 tax-free.
How, for both you and your spouse?
But for each person.
Right. So let's say that he was a correction officer. His W-2s, his 1099 hour is for $50,000, and she was a correction officer, and hers is $50,000.
They're both tax-free.
And they took $10,000 each out of their IRA. How much can they back off in income?
All of it.
Right, 150, 50, 10, and 10. 120,000 they would back off and not pay New York State taxes.
And then don't forget their Social Security is
And their
tax-free
Social
too.
Security is completely tax-free. So when you are a public employee, federal, state, local, municipal employee, what a benefit you have living in New York State.
Oh my goodness, most definitely. It's it's so funny. I'll talk to some teachers or some people who work for New York State, and I hear this once or twice. I don't know if this is the right thing to say, but they're like, "I'm in pension prison." I'm thinking of somebody right now, and she's like, "I have to stay until I'm retired because that pension is just such a pot of gold."
It really is. It really is. Now, what if somebody that's listening has not been backing off their pension plan on New York State? What should they do?
Amend their return.
Because they're going to get that money back. Will New York State usually contact them and let them know that it was incorrect?
Only if you use the wrong line on your tax return.
Usually not.
Yeah, they won't let you know.
Right.
So, and you can amend the last 3 years' return. So if you are somebody that's over the age of 59 and a half, you didn't know to take off the 20,000, which that happens all the time if you're a do-it-yourselfer, or if you're retired on a federal, state, municipal pension plan, regardless of age, and you didn't know to take it off, or if you didn't know your Social Security was completely tax-free, you want to amend your New York State return.
You certainly do. You certainly do. I've had people who, and there's a 3-year statute of limitation, who didn't subtract it off the state, and they owed a lot of money to New York State. And when I saw it, my eyeballs just about bulged out of my head because you get such a tax savings. You don't want to pay $1,000 more than you have to.
Right. I'm Esther Williams, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930.
And wait, sorry,
Yes, sir.
somebody just texted in. Social Security is not tax-free with the New York State pension. We're talking on the New York return.
On the New York return.
Right.
Not on the federal.
Right, because on the federal return, you're still paying tax on your New York pension and up to 85% of your Social Security. But on the New York return, you get to back both of them away.
Right, right. So that's New York only. And the other thing is, when this year, with all of the changes with the big beautiful bill, specifically tax-free tips, tax-free overtime with limits, and the 6 and 6 potentially married filing joint return if you're both over the age of 64 and your income is under 150,000, that subtraction, those are all going to be add backs in when you're doing the New York return this year, because the federal, when you carry everything over from the federal return, it's not all deductible on New York State.
That's right.
So you got to be very, very careful.
Yes.
All right, so we still have 3 months right before the end of the year. Looking at pensions, people can still contribute to their pension plan at work and reduce their liability. So this year, the elective deferral, the annual limit is $23,500. And that would be for a 401k, 403b, 457 plan. And the catch-up provision for them is $7,500. So that you're looking at a really large amount of money that you can put into your pension plan this year, and that would be money that comes directly off your federal and New York State return.
Yep. There's a longer text. You want me to read it?
Yeah, read it.
My husband and I both have New York State pensions and Social Security, and we do not pay any state taxes. We still file a return. Will we get the inflation check? Oh, that's a really good question.
Depending upon the income, right?
Mm-hmm.
Yeah. Well, if it goes by your New York adjusted gross income after your subtractions, yeah, that will be a zero pretty much,
Right.
unless you have
It
interest
sounds
and
like, yeah.
dividends. So yeah, you should still qualify for the check. So
Right.
you want to check line 33 of your New York return, see what it says. And if it's under 150, you'll get the full $400.
Right, and especially they've been backing off all of their New York State pensions and Social Security,
Very good question.
right?
Yep.
Okay, so it's 23.5 for the elective deferral. What does that mean, elective deferral?
You elected to defer paying money yourself, not now, but later.
Right, but here's the thing. Does that mean that, a lot of times people say, well, I'm putting in 3%. An elective deferral is not based upon a percentage, is it?
Oh.
Hello, Esther to Chris.
I mean, well,
Because in other words, in an elective deferral, you could put the whole $31,000 away if your wages are $31,000.
right, but you could also
right?
elect to do 10% of your income every
Right,
week.
but you can put. In other words, a lot of times people would say, "Well, I want to do 10% of my 50,000, which is 5,000." Okay, but you really could do 31,000 if you're over the age of if you're 50 or older, and it doesn't, as long as your wages are at least 31,000.
Right.
So sometimes I've worked with clients that have gotten maybe a big settlement from an estate, and they really want to maximize their pension contribution. They can put that whole 31,000 provided their wages are in there. It doesn't have to be limited by a percentage of your income.
Also, what about you inherit money from mom or dad, they pass away, you're still working. The money you take out, you have to take from their IRA or their 401k. That's going to be income on your return. So why not load up your 401k through
That's right. That's
your
right.
job.
So that's great. That's great tax planning. So on this side, you're getting penalized, but on this side, because it's an elective deferral, you can put a bunch of extra money away in your paycheck, and so it basically counterbalances that money that you got from an inheritance, from an IRA from mom or dad, right?
That's
Right.
right.
So now, what is a catch-up provision, and how is that important?
Well, that means you're older, not old, older.
Look at somebody just texted in. What about the super catch-up for 2025? There is a super catch-up.
Yep.
Right.
You got
right.
that, Chris?
Yeah. So, well, once you hit 50, you're allowed to put from 24,000 up to 30,000 in your 401k.
Right.
So that's the catch-up. The super catch-up is when you're in between 60 and 63. It's so minute, but it still qualifies for people, and they get to put in an extra 3,000, if I'm not mistaken off the top of my head.
Right.
30.
So actually, this year it'd be 31,000 plus 3, so it'd be 34. And that's absolutely great, because that's money that completely is off of your tax return, completely. And so on 34,000, if you were in the 25% bracket, you'd save $8,500 in taxes by doing that. But it's October, November, December. We only got 3 months.
That's right.
Yep.
Now, an IRA kind of has a specialized treatment, because you actually don't have to have that done by December 31st, do you?
No, you have to April 15th. So,
Of next year,
right.
2026, and you retroactively can claim it for 2025, even though you made the contribution in the next tax year, provided you had wages or self-employment.
Right. Yep.
And
And
there's-
sometimes, though, it's the best thing to do is wait till you get your taxes done to see how much you can put in your
That's right,
traditional
'cause
or your
I'll
Roth.
sit with clients and I'll say, now, how would you like to get an extra $4,000 refund? Oh, I would really like that. All you have to do is put money into I say you take it from this shelf of the bank to this shelf of the bank, and it becomes fully tax deductible, and you save money. So, and you can make that decision up till April the 15th of 2026, retroactive to 2025.
That's right.
And then a simple plan, if you're self-employed, has a catch-up provision of $3,500, and $16,500 is the contribution you can make under a simple, which would be $20,000 total.
Yeah, Charmaine at the Next Financial, she just helped one of my clients this year. He did a solo 401k.
Oh, that's remarkable.
It was really remarkable. You can put in, how much? About 40?
40, a lot of it. It depends on your net
It's like
profit. and-
$42,000.
$42,000.
Yeah.
Yeah, which is a
Right,
really
and so a solo 401k is when you're a sole proprietor and you have a great net profit, you can just load up that pension plan like crazy.
you
Right.
certainly can.
Yep.
All right, and then Tiffany, you love the pension savings.
Yep. We
credit.
got to go.
I know. I got one more minute.
No, we don't.
That goes to
We're done.
$79,000. All right, I'm Mr.
Go
Gleason, tax lady.
Bills.
Talk to you later. Bye bye.